So, how you doing, guys? Today we are here waiting for the jobs claim report, guys. We're waiting for the jobs report, guys. So we're checking at the jobs report right now, and our expectation is, between 190, 180,000 jobs. Anything higher than that is not gonna be pretty. Sorry, guys, about the noise. There's a lot of work going outside. If we get anything more than 190, 180,000 jobs, Jerome Powell is not gonna be very happy, because what he's trying to do by raising rates is squeeze the economy into a halt, into a slowdown, not a stop, but a slowdown. And what's happening right now is that we are not able to control the way the jobs and the people are getting higher. We are seeing a little bit of layoffs on big tech, big companies, but nothing exponentially. And also we don't want to see ginormous layoffs, because then it will hurt the economy too much. We wouldn't be able to slow down. We will just be a hard slowdown, which it will hurt the whole economy. So what we're expecting right now is 180, 190,000 jobs, no more than that. Remember, the FOMC meeting just passed 2 days ago, a day ago, and Mr. Jerome Powell looked very bullish. And what he basically says that this is not the time for him to slow down raising rates or anything like that, meaning that in the future he might keep raising rates by 0.75. So this report is very important, because it could also tell how good of a job Jerome Powell is doing. And not only that, but it could also help us slow down, or at least raise rates at a normal pace, 75, 50. I meant 25 and 50, not 75, because those are really big rates. You might don't feel them right now, because it takes a little bit to kick in the economy, but once you feel that on your mortgage, on your car payment, on your credit card payment, anything like that, it's going to affect you really, really bad, guys. But let's take a look at the jobs number. Let's see what's going on, guys. Follow updates on the U.S. employment report. Let's go, guys. I already have the numbers here. I've been refreshing the page, and oh man, jobs report. Oh guys, you guys don't want to hear these numbers. Total payroll employee increased by 261,000 in October. The unemployment rate rose 3.7%. The U.S. Bureau of Labor Statistics reported today. Notable jobs gain occur in healthcare, professional and technical service, and manufacturing. This new release presents the statistics from 2 months service. The household service measures the labor force status, including unemployment by demographic characteristics. The establishment serving measures non-farm employment, hours, and earnings by industry. For more information about the concept and statistics methods used in these two services, see the technical notes. I just like reading the whole thing, because sometimes they might have extra things included on the summary. But for what we're saying over here, unemployment rate increased by 0.2%. The unemployment as of right now is 3.7%. And the unemployment rose by 306,000% to 6.1 million unemployees in the United States of America. This range is, I guess, between 3.5% and 3.7% since March. We're going to take a look at a lot of these things, guys. We're going to read a lot right now. Okay, right here. Sorry, guys. I scrolled down too fast. over here. I was just scrolling up and down just to see if there was anything that I have to do. But let's look at the total. We're gonna take a little bit and read a little bit of the establishment survey data. Total non-farm payrolls increased by 261,000. Yes, we know that. So basically, we blew it out of the park right now, having so many jobs. These jobs are strong right now. The economy is weak in the sense that everything is so expensive, everything is so high. Gas, rent, food, even for you to buy clothes right now, it's a little bit expensive because you're getting paid, of course, a little bit more than last year. We could say even a lot more, but everything is so expensive that it's not making up for the difference. Like, I know that there's people that push bills, for the next payroll, next time they get paid, to be able to afford their commodities, food, goods. But let's keep looking at other news and stuff. These are like the main report, the U.S. Bureau of Labor Statistic. This is like the number one report, but I like to get news also from like a Bloomberg, Market Watch, and then we're gonna take a look at the stock market to see what's going on today. Follow updates on the employment report for October. We already read 261,000 jobs added. Payroll grows underscore. Powell is out of balance. Powell is going to be very mad at us, guys. This is not looking good. Stock futures little change. Treasury yields climb up. Of course, people don't want to buy stock when they see that Jerome Powell is still going to create more turmoil on the stock by raising rates. What people are going to do, people are going to go buy bonds for sure, so they can have their money in a safe place and they can get the 4.5% yield or whatever they're getting right now, which is amazing, Payroll growing is not as slow and fast enough. That's what we talked about. Jerome Powell want everything to be very slow, very minuscule. So, and like I also say, keeping another 75 point base point hike on the table for December FOMC meeting. Thought obviously that was gonna make like a difference or anything, but it basically did not, guys. Oh, this is a very interesting job. 11, let me see, let's look at the dates over here. This is 7/9/11/21. Oh wow, they got the postal services over here. Oh, I'm gonna take a look at this chart in a little bit. So the jobs report, guys, are coming in very strongly. So I know that people don't want to hear this, but having that as a showing of a strength means that it's just people switching jobs. There's a lot of jobs that are still not filled. And remember, a lot of the kids right now, they just went right back to school. So a lot of those jobs were just like kids, gave up the job so they could go back to school. So maybe in that, it's showing some of the unemployment numbers and on some of the employee numbers, which is amazing, guys. The economy is strong. I know Jerome Powell don't want to see that, but at the same time, I don't want the economy to go in shambles and become so weak that we can't even, sustain the economy. We do not want to print any single more dollar, guys. We do not want to print a single more dollar. We don't want to stimulate the economy right now. We want the economy to cool off and we want the economy to do its thing on its own. Just us making the economy move, not the government buying bonds or injecting the economy with trillions and trillions of dollars that then we're gonna have to pay back at a higher cost, and you're basically not gonna see that money. It's the same thing when they were giving the stimulus checks. Yeah, very happy, very excited to get stimulus checks, which were not enough anyways. $1,200, $1,400. You know, I was very happy I got a stimulus check, just like everybody else, but I did not know how bad it was gonna get. That is a fact. And you know, we living it now and seeing it with the jobs numbers, the rent, the CPI numbers. You know, thank God we have Jerome Powell, Janet Yellen. They're doing a good job. They're trying their best. It's gonna take us a while, maybe a couple of weeks. Couple of years, couple of quarters for us to start seeing some normality. And you can tell because remember, Amazon, Google, Apple, Meta. Sorry, I always call it Facebook, but now it's Meta. Their earnings were not 100% terrible. Like you know, out of the world, like you would be like, okay, these earnings did not come close to each other. Like they didn't be expectations, but when it wasn't as bad as we thought it was gonna be. And we expecting these companies to make money like back then in 2020, 2021, when everybody had money, because the government was providing us with extra money on top of that. You were working and all of that, and everything was a little bit cheaper, so you have more money to spend, more money to buy things. You know, you can even tell now Amazon's delivering way less packages and all that. So it's working. It's just not working as fast as Mr. Jerome Powell finally wants, because I know we all want him to pivot and, you know, make a change, and from raising rates at such a high fast paced, he could do it slowly to 25 base points, or maybe even stop raising any rates, you know, because we're not going to see that at the beginning of the year. The end of these years, we're going to see more rates going up, more Jerome Powell raising rates, and we also going to get a little bit of more inflation, discontrolling the market. As we can see, the stock market's bleeding as never before, guys. Never before. This is like the same way when I started investing. At the beginning, the stock market was not doing too much. It was just moving. Now it's just moving down, guys. So, how Powell pivoted away from the Fed's dovish message and tanked the market. Yes, we remember 2 days ago, Mr. Powell was very hawkish when it came to like, oh yeah, everything's okay, we're doing a good job. And then there was a reporter that asked him, and he just turned tables around and went aggressive when it came to the economy, and didn't just drop like out of nowhere. Let's look at it, because I always like to look at VO, BTI, or QQQ, guys. Let's see, a week ago. Now, this is when Jerome Powell was speaking. Look at it, 150, November 2nd. By the time he finished talking, we were up here. And then we went a little bit more up, because he was being a little bit more dovish about it, or hawkish. And then he went dovish when that reporter asked him, and this is where we are now. Today, the job reports, I guess, is helping the market, because it's showing a strength of economy, which I like. So, BOO is not doing too bad today. It is down for the week. 1 point. Oh my God, it was up like 4%, guys. I'm sorry, it was up 2.13% November 2nd. Now we lost the 2.13%, plus we are negative 1%. So we like negative like 3.5%, 4% now. I don't own that much over here. I only own $15. I'm growing my account slowly, guys. BOO. BTI. Let's look at the BTI. It's the same thing. QQQ. Just looking at the pattern that when Mr. Jerome Powell spoke, he made us feel like we was going to the moon, or at least he made us feel that everything was gonna be all right. Then everything went down. But guys, these were the job reports. I just wanted to show you a couple of stats, couple of the news, so we can talk about it. Yes, it's not looking as good as Mr. Jerome Powell wanted to with 261,000 jobs. So we predicted 180,000 jobs. So the stock market's not gonna take this negative, but at the same time, Mr. Powell is not gonna take it positive. And at this point right now, all we want is for Jerome Powell to be happy, because he's the one that has all the control of the monetary supply right now. And if he's saying that we are spending too much and things are not the way they're supposed to be when it comes to prices, yeah, he's gonna work it out, man. Give us some pain. What can we do? Look at the S&P 500. It's down. We're down by a couple of points today. Nothing crazy. But yeah, guys, this was my job report. I hope you guys have a good day. I'm out. Peace.